You know that feeling, that little jolt of panic when you hit submit on a VAT return, and then moments later, you spot a mistake. Yeah, it's a feeling no business owner wants. But look, it happens to the very best of us. That's exactly why we've teamed up with the experts at My Tax Accountant to bring you a clear, straightforward guide on what to do next, all based on the very latest rules for the 2025-26 tax year. So there it is, an error. Your heart might be beating a little faster, but the first thing I want you to do is take a breath. Don't panic. Honestly, there is a clear, structured path to get this sorted out, and we're going to walk through it together, step by step. The specialists at My Tax Accountant, well, they deal with this stuff every single day. They've helped us lay out a process, which has just been confirmed in the recent 2025 budget, that turns that initial wave of panic into a clear, manageable plan. So let's have a look at what we're going to cover. All right, here's our roadmap. We'll kick off with how to identify your specific error. Then, we'll dive into the two main ways to fix it, the simple method for minor errors and the formal process for major ones. We'll also cover the all-important deadlines and penalties, and finally, point you in the right direction to get expert help. Right, first things first, before you can even think about fixing a problem, you've got to understand exactly what it is. So let's take a look at what typically goes wrong with these returns. The first thing to realize is just how common these errors are. We're talking everything from simple typos to putting a number in the wrong box. Believe me, HMRC has seen it all. A classic example is applying the wrong VAT rate. Let's imagine Aisha, a freelance graphic designer in London. She does some work for a client in New York. That's an export service, so it should be 0 rated. But in a rush, she accidentally applies the standard 20% rate. It's such an easy mistake to make, but it can throw off her entire return. Other common slip-ups? Claiming that on client entertainment, that's a definite no-no, or accidentally entering the same invoice twice. And here's a quick pro tip for you, and it's a big one. The absolute best cure is always prevention. Just getting into a solid routine of double-checking your numbers before you file can save you a world of hassle later on.
Okay, so you found your error. Now what? Well, HMRC has two very different paths for correction, and the one you take depends entirely on the size of your mistake. Let's start with the easy one, the simple fix, for those smaller errors.
This lays it out perfectly. On one hand, for smaller stuff, you can just adjust it on your next VAT return. It's quick, simple, and all integrated. On the other hand, for bigger mistakes, you have to formally notify HMRC. That's a more direct, separate process. So let's break down that first method. So, the magic number you need to remember is this: £10,000. If the total net value of all your mistakes adds up to £10,000 or less, you can almost always use the simple adjustment method. And when we say net value, all that means is you take what you underpaid, subtract what you overpaid, and that's your final number.
But hang on, that's not all. Here's where most people need to pay close attention, especially if you're a larger business. It's called the 1% rule. Let's say your net error is more than 10 grand, somewhere between £10,000 and £50,000. You might still be able to use the simple method. The catch is, the error has to be less than 1% of your business turnover. That's the figure in box 6 of your return. It's a nice bit of flexibility for businesses with higher sales.
And here's how you actually do it. Step 1, you calculate that net error amount. Step 2, you simply add that amount to either box 1 of your next return if you owe HMRC more tax, or to box 4 if you've overpaid and they owe you. And step 3, and listen, this is absolutely non-negotiable, you must keep a detailed record of what the error was, why it happened, and how you calculated the correction. Your paperwork is your best friend here. So what happens if your error is bigger than those thresholds we just talked about? Well, that's when you have to go down the formal notification route. Now, I know that sounds a bit intimidating, but the process is actually very clearly laid out. You absolutely have to notify HMRC if your net error is over £50,000. No ifs, no buts. You also have to use this method for those errors between £10,000 and £50,000 that failed the 1% rule. And the last one is crucial. You must formally notify them if the error was deliberate. HMRC takes your intention very, very seriously. Now, stay with me because this next point is a really important update that might surprise you. That old paper form, the VAT 652, it's gone. It was officially withdrawn in October 2025. This means all formal corrections now have to be done digitally, online, through your government gateway account. It's a huge shift to digital that everyone needs to know about.
And here's a little bit of good news for anyone trying to plan ahead. The recent 2025 budget actually confirmed all of these digital procedures. And that's great because it provides some welcome stability for businesses, knowing that these are the set rules for the 2025/26 tax year.
Okay, so we know the how. Now let's talk about the when and the what if. Understanding the timelines and what could happen if you don't act is absolutely essential for your peace of mind.
The big number to keep in your head here is 4. You generally have a 4-year window from the end of the VAT period where the mistake happened to correct it. So that does give you a pretty significant amount of time to go back, review your accounts, and get things right. Now, this table is so important because it really shows you how HMRC thinks. The penalty isn't just about the amount of money. It's all about your behavior. Look at the top. If you took reasonable care but still made an honest mistake, the penalty can be 0. But as you go down that list from a careless error to a deliberate error, and then a deliberate and concealed error, well, you can see those penalty ranges shoot right up, all the way to 100% of the tax you owe. So if you take only one thing away from this part, please let it be this. Telling HMRC about a mistake yourself, making what's called a voluntary disclosure, is the single best thing you can possibly do. It shows you're acting in good faith, and it can massively reduce, or sometimes completely get rid of, penalties for careless mistakes. The golden rule is, don't wait for them to find it. All right, we've identified the problem, we've looked at the solutions. Now it's time for that final, most important step, putting it all into practice and making sure you can move forward with complete confidence. So here it is, your simple 4-step checklist to follow. 1. Identify the error. 2. Calculate the net value. 3. Check it against the thresholds to decide if it's minor or major. And 4. Act. Either adjust it on your next return or notify HMRC straight away. It's a clear, logical plan. But what if you get through all that and you're still not 100% sure? Maybe the calculation feels a bit too tricky or you're worried about how to word your notification to HMRC. If that's the case, getting professional advice isn't admitting defeat. It is without a doubt the smartest move you can make.
The team at My Tax Accountant are true experts in handling these exact situations. They can take care of the calculations, manage the disclosure process, and just make sure everything is done by the book. For that total peace of mind on VAT, or any other tax issue for that matter, you can give them a call on 0208-570-8531 or drop them an email at info@mytaxaccountant.co.uk.
And finally, just our standard disclaimer. Please remember, this guide is for general information, based on the rules for the 2025/26 tax year. Every business situation is unique and can be complex. You must always consult with a qualified professional like the fantastic team at My Tax Accountant before you go making any financial decisions based on what you've heard today.